We ended the second quarter at the bank level with a profit of 353 crores, 26% up from the level of 280 crores which we clocked same period last year. If you look at our advances number, we ended this quarter with a number of 50,000 crores, which is about 11% rise from what the same level was last year. If you look at the composition of where this 11% growth has moved, now we've talked about it since last year about the fact that the commercial vehicle construction equipment area was not doing well, and we've consciously slowed down that area. If you look at CVCs, there's a negative growth of 17%, so the rest of the loan portfolio has actually grown by 18%. You've seen significant growth coming in the consumer area, which is about 26% up from year on year. The agricultural related lending has gone up by 23% on a year-on-year basis. So overall, it's about 11%, largely coming from the slow growth or the negative growth coming from the commercial vehicle construction equipment area. For this quarter, we end with a net interest margin of 4.9%, which is higher than what we had the last quarter as well as the same period last year. Gross and net NPA is pretty much under control. At the gross level, we are at 1.97%, and net level, we are marginally lower than 3 months ago, with the net NPA number at 0.95%. Our restructured assets, which are considered standard, continue to remain pretty low. As of September, our restructured standard assets are 45 crores, which is 0.09% of our overall advances book. During this quarter, of course, we achieved this landmark of crossing the 500th branch and the 1,000 ATM, which we completed during this quarter. Overall, CASA at 29%. The savings book has shown a growth of 42% on a year-on-year basis. And in addition to the current and savings account, our swept time deposits is another 7.5% of our overall deposit base. Capital adequacy again continues to be pretty healthy. Our Tier 1 capital itself on Basel III norms is at 18.1% if I take the current half-year profits. And our overall capital adequacy under Basel III for this period at 19.4%. Bank standalone ROAs again at 1.7%. Of course, during this quarter, we had this big event of the Treasury going volatile and the accounting hit which people had to take on that. RBI did give concessions. What we have done is the available for sale and HFT portfolio, which was there as of 30th September. We have not transferred anything to the HTM category, which the RBI had permitted. In fact, we were permitted to move that to the HTM category as of valuation of July 15th. So we've decided not to transfer anything to the HTM category from our AFS HFT portfolio. On what was there on the books as of 30th September on AFS HFT, the net depreciation which was there on the books, which is about 263 crores, we have taken a pain of 88 crores for this period, and 175 crores goes to the next period.